If you trade futures, you've seen this move more times than you can count. Price pushes just past the high of a session, runs the stop sitting above it, then turns and goes the other way. The clean breakout was a trap. That sweep past a session's high or low, right before a reversal, is what I want to show you today. The whole setup, the rules, and the handful of things that actually make it work. I've been running a prop firm challenge lately, and this is the setup I'm actually using to trade it. A couple of trades a day, most of it planned in advance, and I'm not sitting glued to the screen waiting for something to happen. That's the part I care about most. I set the trade up, I know where I'm getting in and where I'm out before price ever gets there, and then I go do other things. Let me walk you through it. Quick note before we get into it. Everything you see on my chart here, the session boxes, these entry levels, the risk to reward boxes, I've got drawn automatically because I run Quantum STS, and you don't need it to follow along. You can mark every bit of it by hand. The logic's exactly the same either way. The tool just saves me redrawing it every morning. So here's the idea. The market moves in sessions. Asia, then London, then New York. Each one builds a range while it's open, a high and a low. And the setup we're trading is what happens when the next session runs past that range and fails. You take the previous session's high and low, that's your reference. When the following session pokes above that high or below that low and then reverses back in, that's the fakeout. It swept the stops resting beyond the level and then it turned. That's the move we want to be resting in order for. Why does it happen so often? Because those session highs and lows are obvious. Everybody can see them. So the stops pile up just beyond them, and price reaches for that liquidity before it does anything real. You're not predicting a reversal out of thin air. You're sitting where the trap tends to spring. Let me build one from scratch so you can see the pieces. Say Asia has just closed. I take Asia's high and Asia's low. That's the range London is going to trade against. On the high, I set a short level. On the low, I set a long level. By default, they sit right on the session's high and low, though you can push them out a bit if you want. If London sweeps above Asia's high and reverses, I want to be short. If it sweeps below the low and reverses, I want to be long. Now the entry doesn't have to sit right on the level. There's one setting that matters more than any other here, and it's the offset. Offset is how far past the high or low you place your entry. Set it to 0 and you're resting right at the extreme. You'll catch every little poke, including the ones that mean nothing. Push the offset out, and price has to travel further past the level before you're filled, which throws away the small meaningless pokes and waits for a more decisive sweep. Fewer trades, cleaner ones. Finding the right offset for your instrument is most of the work, and I'll come back to how you actually do that properly. Once the level's set, I draw the trade out in full before price arrives. Entry, a stop on one side, a target on the other, the whole thing laid out as a box. That's the part that makes this set and forget. I rest a limit order at the level. My stop and target are already the edges of the box, and I'm done. If it fills, it fills. I don't need to be watching. A few rules that make this hold together. First, the sessions feed each other in a chain. Asia's range sets London's levels. London's range sets the pre-open. Pre-open feeds the New York morning, the morning feeds the afternoon, and the afternoon feeds the next day's Asia. Every session hands its range forward to the next one. So you're never guessing where levels come from. The session that just closed gives you the levels for the one about to open. Second, and this one trips people up, each session should carry its own sizing. London doesn't move like Asia. The New York morning doesn't move like the afternoon. So the stop and target you use for one session shouldn't be the stop and target you use for all of them. Size each session to how that session actually behaves. It's a small thing that makes a real difference to your numbers. Third, you've got a choice on how the stop and target are measured. You can set them as fixed points, same distance every time, or you can size them from volatility using ATR, so the box gets wider when the market's moving and tighter when it's quiet. Neither is automatically better. On some instruments, fixed is cleaner. On others, the ATR version keeps you out of trouble on the wild days. That's something you test, not something you assume. And you don't have to trade both directions on every session. If there's a session where you only ever want the longs or only the shorts, just run that one side. Now the part that's less mechanical. This is the judgment layer. It sits on top of the setup. It's not the system itself. After enough reps trading this, you start to get a feel for where price is likely to react. And I want to be careful here, because everyone in trading says, trust your gut, and it means nothing. But it's not really a feeling. It's just Confluence I've seen play out enough times to spot it quickly. Here's the concrete version. When one of these session levels lines up with a bigger reference, the previous day's high, the previous day's low, the day's open, that spot carries more weight. Price reaches for those levels. It'll sweep everything sitting beyond them, drop everyone out, and reverse. So when my entry level sits right on top of the previous day's high, I pay more attention to that one. That's not a hunch. That's a level I've seen react before, but you never actually know. Sometimes price sweeps it and keeps going. Sometimes it doesn't even come close, and your limit just sits there all day untouched. So here's something I do, and I'm giving it to you as an observation, not a rule. Do what you want with it. On a day where a session level sits right on one of those bigger references, I'll sometimes place two orders. One at my normal backtested level, and a second one nearer the bigger reference with a wider stop, betting on the sweep and reverse. When it works, that's your best day of the week. When it doesn't, price runs straight through the wider stop and you're out. So be careful with it. Keep the size small. And if you're on a challenge or a funded account like I am, that wider stop is exactly the kind of thing that eats your drawdown limit, so respect that before you get cute with it. One more read, and this one's lower risk. When a session closes, you can carry its high and low forward as extension lines until that session opens again. Do that across a few sessions, and you'll sometimes see a cluster of those lines stacking up in one area. When price hasn't been back to test that cluster yet, it very often will. So resting an entry, or setting a take profit, near a cluster like that tends to make sense. Untested levels pull price back to them more often than not. A few honest notes before you run with this. Not every sweep reverses. Some of them are the start of a real move, and price pushes past the level and never looks back. That's the trade going wrong, and it will happen. The offset helps, but it doesn't fix it. On a strong trend day, this setup gets run over, because the whole premise is a reversal, and the market isn't reversing. So this isn't a setup you fire blindly in every condition. It's at its best in a market that's ranging and rotating between levels, not one that's going one direction all day. And the levels themselves are only worth as much as the settings behind them. Which brings me to the one thing I would not skip. Before you put real money on any of this, test it. The offset, the stop, the target, those aren't numbers you should be eyeballing. Run them on historical data for the exact instrument and session you're trading, and see how they actually behaved before you commit. That's the part that's genuinely hard to do by hand, and it's the part that matters most. That's actually why Quantum STS exists. I built it out of trading this exact setup. I wanted the sessions, the levels, and the risk to reward boxes drawn for me so I could set a trade and step away, and I wanted a way to test my settings before I trusted them. So it comes with a dedicated backtester that runs this same logic on historical bars and gives you the real numbers. Win rate, drawdown, all of it. For whatever offset and stop and target you're thinking of using. And the extra reads I showed you in the Confluence part, the key levels, the extensions, the trend context. Those are all built into the indicator itself, for when you want to weigh a setup instead of just take it. If that's useful to you, the link's in the description. But the setup itself is yours either way. You can trade every bit of this by hand. If you've got questions, come find me in the Discord. I'll see you in the next one.